Welcome to the June 14th, 2019 video version of the Wagner Daily. And in this video, we're going to cover broad market price and volume action, current open positions, and potential new trade setups over the next few days. So let's get to the charts. First up is the NASDAQ Composite. The NASDAQ rallied from a dip below the 200-day MA, this orange line, about a 8% rally into the 50-day MA where it stalled. And this line right here represents about a one-third retracement of the move up, which is about in line with the 20-day and the 10-day MA. This is the 20, the beige line, and the dotted dark blue line is the 10-day MA. We prefer to see the NASDAQ hold above the 20-day EMA. That doesn't mean it's going to hold there, but that would be a very bullish scenario. Have it chop around for the next week or two while the 10 MA and the 20 MA catch up would be ideal. Again, anything in this entire area though is in play. All we have is a sell-off with a rally. There's no higher low in place yet, so anything's possible. And onto the S&P 500. Again, we have a 7% or close to 7% rally above the 50 MA. Unlike the NASDAQ Composite, the S&P 500 has reclaimed the 50 MA. About a third retrace of the entire move up would be a pullback to 285, which again would coincide with the rising 20-day EMA if we were to pull back in tomorrow. But we expect the price action to maybe go sideways for a few days and hopefully allow these moving averages to catch up. As for open positions in the model portfolio, first up is Run, which is just above break even right now. If it can punch through 17, it could be in good shape, especially if it does so on volume. MDB was up about 23% or so from our entry point, and if you're just swing trading for quick pops, that's more than enough profit. But we're trend traders, so we're looking for bigger gains, especially when there's a sharp move out of the gate here. But whenever stock's up 20%, 15, 20%, ideally we don't want to see that profit, such a big gain, turn into a loss. So normally we'd place the stop about 5% above our entry just to prevent the stock from turning into a loser. Our stop right now is about, right below 155, so it's about 3% higher. SPSC just about break even here. And still looks pretty good. Just consolidating on lighter volume here. If it can get above the 2-day high, could attempt to test this 110 area again. INSP down about 3% from a false breakout right here. But as you can see, the price action is just chopping around in a fairly tight range here the past few days. We're not concerned about the action here as long as it's able to hold the 20-day EMA. A break of the 20 would lead to a test of the 50. That would not be ideal, but still wouldn't trigger our stop. However, break of the 50 on volume isn't something that we'd like to see. CDNA looking pretty good and is up about 11% from our entry, which I believe was around 34 here over the highs of this NR7 type day. We're looking to add to CDNA if the price were to stall one more day. It was only a 2-bar pullback. Generally, we look for a 3-bar pullback. It took off on us, so unless the price can pull back into the 10-day MA, looks like we'll just have to live with the size we have right now. And our last position is SE, which we bought around 29.08 down here off the 20-day EMA. So we're up about 5-6%. There was an upgrade today, and this was a pretty weird response to the upgrade. The price sold off from the open and basically couldn't find any buyers the whole session. But the one interesting thing is that volume was really light, less than the prior day. If volume would have been really heavy above average, that would have been ugly, but I think the light volume leaves the door open for a recovery here. There's also an uptrend line. There's also support from the 10 and 20-day moving averages. So I think SC will be fine as long as it can just hold above this 20-day EMA, continue to go sideways, chop around, and attempt to break out down the road if broad market conditions continue to stabilize. Most of the setups in the report are based on valid basing patterns that develop over 5 weeks to 3 to 4, 5, 6 months or something like that. But there's other type of setups to look at. Many that don't make the report are setups such as Zen, where there's a sharp move up and then there's a pullback. So notice how the volume's dried up the past few days above support of the 10 and 20-day moving averages. Whenever there's tight price action like this over 1 or 2 sessions on declining volume here, the short-term swing trader has an opportunity to enter with a fairly tight stop. One could enter above a 2-bar high with a stop beneath the 2 or 3-day low here. For those not already long, INSP is potentially in play above the 2-bar high. Twitter broke the 50-day MA on a pickup in volume here. Really not interested unless it can climb back above the 50. MDB, like Zen, is another setup for those, for maybe aggressive traders if you want to enter above the 2-bar high. Luckin Coffee, recent IPO. This is a downtrend line break, but it's possible to enter over the 3-day high here due to the light volume and tight action, the 2 inside days basically. GHSD potentially in play here on a breakout above all the stalling action around 41, or on a pullback into this 20-day EMA here. That would be ideal. Wix is another one of these patterns with 2 tight days of action on light volume. A move through the 2-bar high could be a swing setup here. Twillo, another one of these swing trades. Entry above the 2-bar high. And we're currently long SPSC, but for those not already long, a move above the 2-bar high could serve as a buy entry using our stop that's in the report right now. Aggressive traders could look to enter Zoom above 106 or wait for some sort of pullback to this 9-day MA here. CSII, decent base. Tried to break the downtrend line, failed. However, if it can get back above this 4-day high here, could be in play. And GWPH, pretty tight range. Here's the downtrend line. Some stalling action around 179. If it can clear this 2-bar high around 179, it could attract some buying interest. And Tandem is looking pretty darn good here. It's had this shakeout bar on 610, but the price action immediately recovered and held the 20-day EMA. This is another stall here. So we have a 2-bar stall below the swing high here, so which makes this 2-day high a pivot here around 71.18, which is just a bit lower than 72.40. And finally, Uber, we mentioned as a buy entry today in the chat room around 43.30. We'll continue to monitor the price action for an entry in the newsletter, but we'd have to see maybe the price stall for a day, maybe an inside day here, or a narrow range day, something like that, and then our 7-day. And to close out tonight's video, I'd like to go over the monthly chart of Run. And most of us, me included, when I first started trading, I was focused on these daily charts of about 6 to 12 months in length. However, I really began to see the bigger picture when I started to scan through the weekly and monthlies. And it's even a bit easier if you were to scan through the weekly and monthlies first and then go through the daily. If you have the ability to put up 3 charts while you're scanning a daily, monthly, and weekly, you can maybe keep your eyes on the weekly and monthly, and if anything looks good, drill down to the daily. But the point being is that if you don't look at the monthly, you're looking at this run, you're going, that's a pretty nice setup here. It's been sideways for about a year. The prior high was in 2015, something you probably couldn't see on a daily chart. So with the monthly chart, we're able to gain quite a bit of perspective here. And what we find interesting about looking at multiple time frames is that we have a breakout setup here on the monthly chart. If it were to clear this 1750 area, on the weekly we have a breakout setup, and on the daily we have a breakout setup. So these are all 3 time frames that are aligned, and when they're aligned and there's no overhead resistance, that's when explosive moves can occur. Our biggest trade this year was in cyber, and the reason why we liked it so much, I believe we netted a 40% move in cyber. was the fact that it had an inside month here and paused after, this is a 1, 2, 3 months of trying to break to new highs for the first time in a few years. Then it went sideways, and then it had an inside month here and then broke out to all-time new highs. With nothing in its way, it was able to run 60-something% without breaking the 50-day moving average here. So that's the type of moves that can happen when a few time frames are aligned and there's no overhead resistance. And from prior studies, I've noticed that it's not always the first move through to new highs that matters. There's a move to new highs, and then there's some stalling action over a few months, and then there's the next move out. And that's not always the case either. As with all setups, this setup isn't guaranteed to work. Lining multiple time frames up won't prevent losses, but by doing so, we really do improve the odds of finding a bigger than average gain, which is what we're all about. We're looking for outsized gains of 30 to 50, 60%. We're looking for stocks that can rally for 2 to 3 months without breaking the 20-day moving average. All right, so that's a wrap for tonight's video. Thank you for joining us, and have a good weekend.